Welcome back, everyone, to another great episode of The Human. Wall. So, just wanted to start off by saying, first and foremost, also outside of being a host of this amazing podcast, I am the CEO, consultant, and founder of Transcenders Consulting Group. So, if any of you all need any type of support when it comes to payroll, taxation, that could be auditing, processing, outsourcing, or if you even need support with benefits, and of course, the good old HRIS implementation, project management support. Definitely send me a message. Feel free to visit my website and send me a note through there, or you can always just send me a message through any page through LinkedIn as well. I'm more than happy to step in and support however you all need, or just to have a conversation in case of support is needed in the future. But now that that's done, I wanted to get into the important topic of payroll is, of course, taxes, although taxes are not typically something that people want to even think about or want to even really get into. A lot of times people don't even want to pay taxes, but it is very important. I can't stress that enough, and how you really, really, really need to just keep up with your taxes and pay that, because you really don't want to get into a pickle when you owe the IRS, when you owe states and so forth. They can tack on penalties and interest, and it can just get really ugly from there. So it is really important. And I wanted to kind of just take a quick dive into why that is very important, not only for an employee, but also for an employer. Okay, so let's start off with the employee tax. So if you're just starting off in your career, you may, not be too familiar with all the taxes that you have to pay. And if you are later in your career, you're probably just beyond annoyed with all the taxes that you paid throughout these years and will have to unfortunately continue to pay. So federal income tax, of course, is the first biggie. And then FICA, which is a combination of Social Security and Medicare taxes that we all have to pay and is very mandatory. And then your state income tax and state unemployment tax too, which is dependent upon which state that you are in, right? So some states don't require some of those taxes to be paid. Florida is one of them. So there are some people that pick to live in certain states just based off of that. Just an FYI. But even if you're in a larger state like California, you would even have like SDI, which is state disability tax too. So all of that can be very shocking when you get your first check. If you've ever heard of your gross pay versus your net pay, your gross pay is, of course, all the hours that you have worked, the times your actual hourly rate, or if you're a salaried employee, whatever your annual salary is, divided by how many pay periods your company pays out. So whether you're on a weekly status, bi-weekly status, semi-monthly, or monthly. And then your gross pay, from there, your taxes get deducted from your gross pay, which leads into your net pay. And also too, if you have benefits through the company, through your employer, if you contribute to the 401k plan, all of that also, gets deducted, even though some of those deductions could potentially be pre-tax, right? Which means that they would be deducted prior to your taxes being taken out. And so sometimes that gives you a little bit of a breather when it comes to your tax calculations, but it is still a lot, regardless of how you try to think about it, talk about it, calculate it. Your taxes are still going to take over, most of the time take over a lot of your checks. So you want to just factor that in before you look at like the big number that you're being paid and think, oh, okay, this will kind of get me through. You always want to factor in your specific taxes as well, because that is going to play a part and a big factor, especially when it comes to your net pay, which is essentially your take home pay, right? And what you'll see deposited into your account each pay period. And so, from that stance, I think a lot of employees do get a little bit upset. I would say a little bit upset. During my career doing payroll, many employees get really upset actually when they first get their check, or it could come to where you're getting a big increase. And so you expect to see a really large amount. So, for example, if you are getting a $10,000 increase, right? You really need to just factor that in. So, say you're on a biweekly stance, take that $10,000 and split it over 26 pay periods, right? That'll actually give you the number of how much it's going to be applied to each check. So usually that's just a couple hundred or so dollars, so just depending. And then you got to factor in your taxes are going to go up because you're now in a different, potentially in a different tax bracket. So your taxes may be a little more. So FICA, which is Social Security and Medicare, those percentages stay the same, typically 6.2% for Social Security, 1.45% for Medicare. But your federal income tax and your state income tax definitely depend on what you're claiming, single, married, and then also, or head of household, and then also how many dependents that you have, right? And so do not get confused thinking that if you do like single and zero, that means you're going to have the less taxes taken out. I've had some people that I worked with in the past. I'm not in the payroll world, but in other industries that thought like, oh, like single and zero, I'm not going to have anything taken out. No, no, no. Single and zero means that you have no dependents and just yourself. And so please understand that you will have lots of taxes taken out. With that being said, it's just really important to just be knowledgeable about that information so that you're not thrown off, when you get your check and that you have just at least a general understanding of that because that's really important as you get into your career. And that helps you kind of like negotiate certain increases. I do also want to mention for employees that if you get an increase mid year or end of the year, there are times where when you go to file your taxes, even though you have not had that larger salary all year. A lot of times when you file your taxes, if at the end of the year you're in a higher tax bracket, at times, the IRS or the states will go back and look at that annual salary and hit you with additional taxes for the whole year. And so a lot of times that requires for people to pay back taxes. And then that also irritates people, right? Because you technically weren't getting that salary all year. It's an interesting, I guess, game, you can say, when it comes to taxes and your calculations and what you owe. So you just want to be cautious about that. I would say, like, if you're getting an increase, in November and December, just think about that. Of course, that's around the holiday season. So it's always great to have an increase. But if it's something that you would be more comfortable maybe pushing into January, so that way you get that increase, for a full year and don't get hit with, heavier taxes down the line, that also would be helpful. Alrighty, so let's get into now the employer taxes. So I don't think people actually realize that employers also do pay taxes and heavily pay taxes, right? So just as you are required to pay your federal income tax, your FICA, your state income tax, state unemployment, state disability, depending upon which state you're in, employers are also required to pay taxes. They actually have to match your FICA taxes, so your Social Security and Medicare. They do also have to pay into that as well. So that's important to note. I think sometimes employees don't realize the heavier burden that employers also have to take on when it comes to that piece. And so that's another cost. A lot of times, employees are like wondering why they didn't get, a certain increase or why this didn't happen, why benefits didn't increase. It's just because on the back end, a lot of things employees don't see is that employers are also footing the bill for many other things, right? And so it is important to know that employers do have to cover that. But I would say from, employer stance, outside of just the coverage of your Social Security and Medicare taxes, matching that for the employee, you really just want to make sure that you're staying up to speed with tax filing and making sure that the taxes are being calculated correctly within your HCM system. That way, that avoids any late filings, any penalties and interest that may come your way. And also, more importantly, it avoids any W 2 issues that could come up down the line. And so you just want to make sure filings are handled accordingly. I think that's definitely most critical from an employer stance. You don't want to get behind on filings, especially even with the deposits, the tax deposits that are due. There's a very strict schedule that the IRS and the states have just based on your company setup. So it could be monthly, it could be semi monthly, just depending upon your company, but also just how large your payrolls may potentially be. Sometimes it's required to be quicker than that. So just keep an eye on that as well. If you have a larger HCM provider, they're definitely already handling that, but they do need the proper information from you, right? You do still have to set up your stage. You do still have to apply for the ID numbers. But I would say just go through and check your quarterly filings as much as you possibly can, just to make sure that those deposits are being done. There are statement of deposit reports that most HCM providers do provide, just proof of deposits. And then, of course, your annual filing filings and quarterly filings that go through. So just want to keep up with that, especially when you're talking about unemployment taxes, because if an employee is, let go, or if an employee, leaves a company, they may try to. So if they're let go, they definitely can go through and get approved for unemployment. But if they, leave still on their own accord, still some employees may try to collect unemployment. And so if those deposits are not being made, that could cause an issue when an employee goes to attempt to collect unemployment. And then from there, if deposits aren't there, that might get rejected. And then that could trigger an audit for you, right? And then from there, if you can get it corrected quickly, then that's always a plus. But if there is an internal issue, or if an employee was miscoded, which is a whole nother topic that we could talk about later on the classifications of W-2 employees into 1099s, from that stance, that could also trigger a larger audit. So you want to just make sure you're staying up to speed on that, just making sure that you are properly in compliance. I cannot stress that enough, is to just make sure that you are doing everything that you can to ensure that you're in compliance, right? Because there's so many different loopholes, so many different ways people could just, in a specific state, there may be a requirement that no other state has, right? And so from there, that could kind of trip you up as well. And so you want to just make sure you're staying up to speed with that. And then next, I really want to point out what I have not mentioned earlier is also local taxes. So I want everyone to be mindful of this as well. Local taxes aren't in every state and aren't in every city. Some of the larger states like Ohio and Pennsylvania have really heavy local taxes as well. So you want to just make sure you keep up with that. But there's also other states and other cities that just have like one-off localities. I know New York has some, Alabama as well. So you want to just make sure that regardless of the standard federal taxes and state taxes, really just make sure you do a local lookup. So you could do a quick search on any state site and just kind of confirm where an employee is living, the city that they're in, to ensure that if there is a local taxes, that is set up. Most HCM providers do have something set up to where when you're adding an employee in, if it looks like they will fall into a specific locality, it will send an alert and it will let you know to set up that local. But depending on when you're hiring and who's hiring, sometimes that can be clicked through pretty quickly. And a lot of times there may be some providers that don't repeatedly come back and remind you. Some do, some don't. But you do have to have that extra layer of tax knowledge. And also from an employee stance, most employees may not even realize, that they are in a city that does require a local. So you definitely want to just kind of keep up to speed on that and just make sure that you're staying on top of those things. Even if it's a local, if it doesn't get deducted from an employee's paycheck, yes, when the employee goes to file, so to the employees, if it isn't deducted, when you go to file, you will have to pay those taxes, of course. So that's just one way to fix it. And then just make sure your employee has that locality set up going forward. If you're an employer, though, you can also choose to go back and recorrect it and take those taxes back. Either way, to note to the employee, you're still going to have to pay your local taxes regardless. But it is important that you also take responsibility, as well as the employer, to just at least look at your checks, make sure they're calculating correctly, make sure you're in the correct state, and then also make sure that your locality is coded. So that's one thing that I think lots of employers kind of slip up and miss too when you're having in an employee, because a locality is not as common as like FICA, right? It's not as common as federal income tax or state income tax. A lot of times those do get overlooked. And so you want to just make sure that if an employee is in a city that requires that specific local to be set up, that you get that specifically set up to avoid any issues, any questions, any concerns or complaints when W-2s are issued and when employees go to file. And in case if after all that you're still questioning, like, well, whatever, this isn't going to do it, why does it matter? It is really, really important. So when you say FICA, when you think about, Social Security and Medicare taxes, just know that that also affects, your older generation. It could affect, your grandparents who are collecting Social Security, and then also even you yourself as well, right? You're paying into it. And when you get to that age and that stage in life, your Social Security checks will be very important to you. I know there's certain discussions going on in the news about Social Security, but it is really important. And you want to just make sure that you're not getting into any pickle. Definitely when a tax issue arises, it can take a while to fix and it's not fun to fix. I've had to fix many of those for, clients of mine. So you want to just make sure that you are doing your due diligence and being a good citizen, right? And just paying your taxes and trying not to complain because we all have to pay for it. We all have to cover it. It is what it is at this point. But it is important and it is most critical. And then last, I just want to talk about some other trends and, current technology that's going on. I would say lots of this is automated now. So back in the day where there used to be a lot of like manual work, manual entry, manual calculation, most of your HCM systems, I want to say almost all, I don't really know too many that are requiring much manual work. Once you hire, as from an employer stance, once an employee is hired in the system, as long as they're coded properly, as long as they have filled out whether they're single, married, how many dependents they have for federal and for state. Typically, everything else pretty much flows in the system accordingly. I do know during the onboarding process, you want to make sure that they have the proper state forms based on where they're hired into. And so that is usually done on the back end, either through your HR team, through your talent team. And then if not, you can get help from your HCM provider to make sure that those forms are set up correctly. But once an employee fills that out, it typically flows into the system. Calculations are pretty standard, right? And so then those deductions come through as normal. You get your tax reports when you are reviewing payroll, and it'll show you the employee payouts, the employer portions, and then your HCM provider deducts those from your company's bank account each pay period. And then the deposits go through and you have your statement of deposits to verify that at the end of each quarter. So if I were you, I would just make sure from an employer stance that you're staying on top of that and ensuring that that automation is working accordingly. It is always best practice to have a human review it just to make sure before the end of each quarter, because as we know, systems, computers can always glitch and there could always be, an unfortunate miskey. So you want to just make sure you're double checking across all boards so that you're dotting your I's and crossing your T's. And the last thing I want to say is that the remote work has also caused a lot of issues throughout the years, especially during the pandemic. If you have been working in any types of space of HR, you have definitely experienced that or know of someone who has experienced that in some way, shape, or form. Just keep that in mind that many employees, of course, moved to different states. And there were some employers that were never notified since everyone was at home. So that caused, some pickles at the end of the year. When going back and auditing, there were a lot of times where employees did notify employers, but employers just weren't versed on those specific states and weren't even aware or didn't even know where to begin to go through the registration process for the ID numbers and setting up new states in the system. So those trends, I will say, will continue as we continue to stay a part of like this, if not full working from home, a hybrid workforce. And so as that continues, I would say just kind of make sure that you have the proper processes or procedures on the back end to accommodate for that. So that way, when an employee does move, that you're able to kind of step in and get things going and coded in your system properly so that you avoid any issues when it comes to, your W-2s that are paid out at the end of the year. Alrighty, you guys. So good information on the importance of payroll tax. Definitely reach out if you have any specific questions. I'm more than happy to just help out, but then also just need to run a quick issue by me. More than happy to step in and help. And I will be back in a few more weeks for another great episode. See you guys soon. Bye.